Thank you for never leaving.
Let's go! All right. Let's go. All right. Today has been eventful. Let's go. So we had today 10 a.m. Orange News. Let me see if I can show you guys. Okay, so we're looking at the, and then let me show you this. So we have Orange Impact, which is medium and not high impact. So it's not something I should really be weary about. It doesn't really affect the market. Let's go, and I'm going to show you today. We had 8:30 news, and then we had 10 a.m. news. Inflation expectation, which was bearish. So then now let's go over to the charts. Just to let y'all boys know. So my rules. Let's just discuss this. Trading consists of, I'm reading it. Trading consists of 5 fundamental truths. Anything can happen. You don't need to know what is going to happen next in order to make money. There's a random distribution between wins and losses for any given set of variables that define an edge. An edge is nothing more than an indication of a higher probability of one thing over another. 5, every moment in the market is unique. So anything is possible because I can't account for every single individual and every single retail trader that's in the market, and I can't account for what they're going to do. So walking into that, we have expectations of anything can happen. So what do? This morning I got on the market at about like 8:35. And then let me show you. So on the higher time frame, I saw that there was this bearish fair value gap that was made, and price had yet to fill this fair value gap because you can see on here it didn't hit it. And get this, along with the fact that this bearish fair value gap, the start of it was the London session high, which if you don't know, it makes sense for price to come up, possibly take out London session high to then push farther down, because as you can see, if we go on the lower time frame, and the higher says it too, but yesterday so from yesterday into today, we had been making all-time highs. And I think I said it yesterday too, it would make sense for us to get some relief to take out these draws on liquidity as we have taken out the previous draws on liquidity. We have made all-time highs. So it would make sense for us to get some relief. That could happen. Let me charge my Mac. Mac attack! Let's get it! All right, y'all boys. So as we hop on the higher time frame, we had made the all-time highs, right? And then price had made this bearish fair value gap. I mark out the bearish fair value gap. I see its London session high. And as I said, I hopped on at like 8:35. So right about here, I marked out equilibrium between Asian session high and London session low. I marked out equilibrium. Price was coming into equilibrium, which was in line with our bias. Price comes and hits this hourly bearish fair value gap. Price comes in and then retraces down into equilibrium, where I was looking at this and I was like, damn, this is right before market open. And I'm like, damn, this is solid setup, right? But then we have market open. We have New York session open at 9:30. So I'm like, and I'm thinking about it. Then I see price comes up here, and now we start to get that, like, this is like the consolidation where we go down, up, down, not really saying anything. We made this up, and then we made this break of structure to the downside, which is off of this bearish hourly fair value gap. On the higher time frame, we are bearish. We are going down. I see price break structure to the downside into this equilibrium. And what I'm waiting for from here, I'm waiting for confirmation. A bearish candle closure out of this bearish fair value gap, out of equilibrium. I wait for that 5-minute closure, and then I enter. Placing my stop loss at this all-time high. I was hopeful in my conviction today. And I said, you know what? If I'm wrong, price will come up and take that out. So that was 40 ticks. And then it's one position. So price break structure, I enter. And then now we get into where take profit. So we had taken out all these lows, all these draws, including London session low. And we've been on this bearish continuation. Now we keep drawing further down. Question is, do we want to keep going further? Are we filling into this fair value gap, bearish fair value gap, to react off of it to push even further? Because it doesn't. Maybe this is like a PM session finish to make this last stretch down, to make this relief, fill all these orders to then push even higher, I bet. But anything can happen. I still didn't charge my computer. Whoa. So like I said earlier, we're under the impression that anything can happen, but just as anything can happen, the odds are in the statistics' favor, right? And as I said, we might be filling into this bearish fair value gap, and it looks like that might be what we're doing. So this could be continuation to the downside to fill this fat ass trade. This will be my biggest trade, which it's awesome that the strategy has been pulling through, because as we go in with these 5 fundamental truths, we're also under the understanding that, like, in our probability, there are going to be wins and there are going to be losses, right? The random distribution between wins and losses for any given set of variables that define an edge. Knowing that, like, there's going to be losses. So I have to walk in with the expectation that anything can happen. But regardless, I have to enter on my strategy. And that's what I was feeling, because like usually I'd want to stay out until 9:50 to wait for what is happening after, which I could have, right? We had entries even back into this bearish hourly fair value gap to fill again. So I could have entered there, right, later, but I saw it and I said I have to. And then if we talk about what's happening on NQ, it was like it was the same thing. 30 minute fair value gap, bearish fair value gap, but making all-time highs on NQ before pushing further down. But NQ that seems volatile, right? But I guess not any. ES looks very more consistent, higher lows, lower lows, lower highs, lower lows. So this is a longer trade. Can't lie. Place this shit at 9:30, 9:40 something, 9:30 something, 9:37 maybe. But I'd say this was like my strongest conviction of the week, honestly. And let me show y'all. Let's go. So right now we're sitting at 760 profit. Took one trade. It's cool to see a strategy getting respected. I'll say that for sure. It's like satisfying. No cap. I was reading this book, and bro, they said trading is like a creative form of expression. Bro, no cap. I can't even lie. What do y'all boys think we're doing, though? What could this be? Is this to push up? Or are we just in equilibrium? Now that y'all see it, I don't need that anymore. What do y'all think? Now, what we would be looking out for would be like closing above equilibrium. So either closing above that or closing above like that. Candle closure, bearish candle closure. If it doesn't close, then I'm not really worried. But low key, I'm not trying to look at this all day though. I guess we closed above on NQ, but let's see. Bro, I can't lie. The news, the updates on this shit, they throw you off, bro. Don't listen to that shit. I don't even think they know what they're saying, bro. I don't even think they're looking at the charts. They're just basing it off of like sentiment. But who knows? I don't know. Right? Like I said, this is really just a higher time frame trade. So it's going to take a little bit tight. Or is this a reversal to the upside to take out all these draws or these draws? Or go higher than this, drop further? Who knows? But low key, that's that, y'all boys. Let's hope the best. Peace out.